welcome to Pursuing Knowledge, brought to you by Pursuit Wealth Group. My name is Brittany Drish, and today I'm here with Tyler Spezio, and we're going to be talking about IPOs and specifically kind of the talk about the SpaceX IPO. So Tyler, if you kind of want to get started for us.
Thank you.
Yeah.
And for those people watching, this is my first IPO, so please bear with me. There are a few Latin words in there.
Yeah.
I've never taken Latin,
You
so
got it.
if I stumble, please forgive me. But we're excited to talk about IPOs. I know
Yeah.
that's something that all of our clients have been talking about. It's all over the news, so
Yeah.
truly a hot button topic.
Yeah. So SpaceX going public, what's kind of going on there?
Huge question, and
Yeah.
that's the question we've been getting from everyone. One thing I want to note is that the SpaceX IPO is not the first IPO ever. There have been hundreds and hundreds and hundreds, if not thousands, over the years. So before we jump into SpaceX, I think it's a good idea. Maybe let's backtrack to think about what is an IPO, what is this founded on, and why the heck are we so excited about it today?
Yeah. Let's start there. What is an IPO?
Okay, so an IPO is an initial public offering, and most people probably know that. And it seems pretty simple. A company that used to be private is now going public. And the past few years, we haven't seen many IPOs. Really, the rise of private credit, if you think of companies like Blue Owl, have really made these huge private companies be able to last on cash supply that they used to need from the public market. Now these companies are so big, the SpaceX IPO is around probably $1.5 trillion. Private credit can no longer sustain that, so now they're turning to the public markets to get money from everyone. Anyone that wants to invest can invest.
Yeah. So what is the history of the IPO? How far back are we talking with this?
Yes, so the IPO, it sounds pretty simple. Companies are taking money from us to raise capital and put money back into the business. But the IPO really starts, and some historians argue with this, but it's more fun if we say this, is it really starts in Rome. And here where my Latin comes in, so please forgive me. Our first idea of an IPO, our first evidence of this, is something that we call the Societas Publicanorum. Societas Publicanorum.
Very well
Saw
said.
that too?
Yeah.
Thank you.
Good, great.
So essentially what that was it was this big structure of joint ventures. So in Rome, it was one of the greatest empires of all time. They had these great projects like the aqueducts. They had ships going through the Mediterranean. They had all these other businesses that the state ran. And in order to fund those and spread the risk among many, they raised capital from others so people could buy into this aqueduct project or into the ship that they're building. So that's where it really started. And these shares were informally traded in the Roman Forum.
Okay. So is that kind of where the modern stock market comes in? It came from all the way back then?
Yes.
Yeah.
In a nutshell, yes.
Yeah.
So if you go back, what we had in Rome, was that the stock market we love and know today? Not exactly, but it was kind of the building blocks of what we had.
Okay.
When we first want to see the true first stock market, the one like we have in New York or in London, we're going to have to go back to 1602 to Amsterdam. And what caused that was the Dutch East India Trading Company. So if you ever watch Pirates of the Caribbean, I think that's the British East India Trading Company. This is just the same thing with the Dutch. And what the Dutch were known for is they were great at circumnavigating the globe back in the day then. And they also had huge spice trade that really dominated the world. The problem with this is that it takes a lot of money. Say this is what, 400 years ago. It costs a lot of money to go on a ship for 2 years, go to East Asia and come back with spices. You need a lot of people, you need a lot of supplies, and you need some ships. And they didn't have GPS, they didn't have weather forecasting.
Right.
So oftentimes those ships are just going down in bad weather. So they need a lot of money and it's very risky. So the crown couldn't do it on their own.
Okay.
One person couldn't do it on their own. So what they did is they started the stock market to spread risk between a butcher and a judge. Anyone in Amsterdam could go in and buy parts of these ships so they could be part of the success. And then if a ship went down, one person wasn't totally ruined. The risk was spread among many, as were the spoils.
Okay. So we're talking 400 years all the way through now. So we're thinking disclosures, regulations, everything should be figured out, right? Is that the case?
That's the great dilemma that we've come to know. And it is a very good system, right? It is not perfect. And after the Dutch, London and then New York really perfected the stock markets. Those were the two biggest stock markets of the time, and really still are. But something came to pass, and that was the Great Depression. And part of the reason that was so exacerbated was that in the 1920s, there were a lot of pump and dump schemes. I know if we say pump and dump, a lot of people think of meme coins or crypto coins. That is happening in that space, but back in the 1920s, that was happening in the stock market. So people would go to the stock market, say, hey, I have this company, please invest. People would invest, and then the person offering the company would take all that money and disappear, and no one had any idea what happened. So what happened is the Great Depression happened, and then people started to realize, hey, we actually need to have some guardrails around these initial public offerings, these IPOs that we've been talking about.
Right. So that's where the Securities Act of 1933
yes,
comes
exactly.
in.
That's where the Securities Act of 1933 comes in, and then later the SEC, and they started regulating IPOs. So the process of IPOs that we have today dates back to the Great Depression, dates back to the Securities Act of 1933. And that's why when you see all these commercials with SpaceX on TV or with any other companies that are thinking about IPOing this year, there's a ton of disclosures.
Okay. So bringing it to SpaceX, what does this mean for the regular investor?
It means a lot of things. It means there are things we can be very excited about. It means there are things that we should be very wary about. And I think a great way to illustrate what could possibly happen with SpaceX and really any IPO that we talk about is to bring it back to Facebook.
Okay.
So I personally don't have Facebook.
Right.
But I know Facebook is a huge deal. I think I grew up with Instagram, owned by the same company. But everyone has Facebook. Everyone knows what it is. And in 2012, Facebook, to use an older term, was the bee's knees. So it was the biggest tech IPO ever. Mark Zuckerberg, everyone knew him. He was on every magazine. He was on every, not podcast at the time, I guess radio show. But he was everywhere, and everyone loved Facebook. And there was so much excitement about Facebook, similar to what we have today in SpaceX.
Okay.
So what was going to happen is that Facebook was going to go public at $38. But here's the kicker, and something we have to consider with SpaceX. When big companies like SpaceX or Facebook, Meta now, or any other companies that are thinking about going public this year, when they first go public, those IPO shares, those shares that are valued at $38 initially, in Facebook's case, those are already allocated to huge institutional investors. So by the time us, or people like us, non-institutional investors, will go and try to get the IPO, we can't. So what we do is we buy in the secondary market. So going back to the Facebook story, they have all these shares allocated, and people go crazy, and they go so crazy, in fact, that the stock market stops. They can't handle the volume of the trades going in, which is insane. Which is insane.
It sounds
the
like
stock
a nightmare.
Market, exactly, and it was a nightmare. So what happened is that the stock dropped. It started at 38 at the IPO price, went all the way down to 17. People were just so confused as to what was going on. And if you think about Facebook today, it's like, man, I would love to buy Facebook at $17.
Right.
But if you were one of the people that bought it right at the IPO and you bought it at $38 and it went to 17, you'd be like, what the heck? And it stayed pretty low for quite a while. So one of the first points I want to make about IPOs is that they are extremely volatile. Okay. So it goes down to 17. And Mark Zuckerberg, the genius that he is fighting and fighting and fighting. And then all of a sudden, cell phones become super popular. And he has this great idea and says, why don't we try to make Facebook better for phones? 2015, the stock's at $100. Everyone loves having Facebook on their phone. I don't know anyone that does Facebook on the desktop anymore.
No.
But it goes to $100. And then today, I don't even know what it's at. Meta is just an incredibly valuable company. I should know. It's more than $100 though, by quite a bit. But that's really the story of Facebook. So really 3 big points I want to make there is that, one, we're mostly dealing with the secondary market when we participate in IPOs. And if you get in early, you're going to get that IPO price probably pretty close. And it's not the story of day one. It's the story of the company. Years and years and years. So on that day one price, 38 to 17, that's not the story of Facebook. The story of Facebook is much greater than that. So it's not a 50% drawdown. And then the 3 is you're investing in a stock and not the company. So if you think about, I'm investing in this $38 stock, it's valued at $38. but I think the company is worth more or is better than $38. And just remember, people are trading the stock, not the company.
Right, right. Any final thoughts that you want to leave with a listener or a client who's really excited about this SpaceX IPO? Just anything that you would want them to know.
Yeah, I think when we think about the SpaceX IPO, it is one of the most exciting IPOs to come out in a long time. It feels like you're really investing in the future. They
Right.
have satellites in space beaming down internet into the middle of Mongolia. They have rocket ships that you can reuse. It's pretty incredible. It feels like you're part of the future itself. So
Right.
it's super, super exciting. But things that I would leave people away with, those 3 points I made just a minute ago, I think keep those top of mind. But there are a couple questions that I would ask before you get really, really excited about what's going on. One, I would just read the S1. Have you read the S1? That's a document that's going to tell you all about what this company is offering, why are they doing the IPO, where's this company going. Make sure you have an understanding of why the company is doing this and what they want to tell you in the S1. The second thing I would say, I'm just going to really hit on this point again because I think it's important, and I probably didn't land it as great, is you're investing in a stock and not a company. And stocks just behave differently than a company. A company like SpaceX, they're going to do what they think is best for their long-term strategy.
Right.
Whether that's we're going to take a loss this year so we can use rocket 5 times rather than 4 times. That's what the company is going to do because they think it's better for the long term.
Right.
Stocks, though, are not part of that company. They're held by people like us that don't know what's going on at the inside of SpaceX. So the stock might behave differently than the company's behaving. So just be aware of that. The third thing is, can you handle that crash?
Right.
I'd go back to the Facebook IPO, $38 going down to $17, but if you could have bought it at $38 or $17 today, you definitely would have done that. But just be prepared. IPOs by nature are volatile. So if you can handle the volatility, maybe it's something you start thinking about. And then the last thing I would say is what is the real reason you want to go into an IPO?
Okay.
Or what is your real price? Again, with IPO, all those $38, in Facebook's case, $38 prices for the stocks, those are all allocated to institutional investors. And when it goes live in the secondary market, they'll drop that. And the $38 will be $50, it'll be $40, it'll be $36. We don't know. But what is that price for you?
Yeah.
And what are you comfortable taking your risk with? Because IPOs, they are risky. And it's something that we have to be careful with. And it's something that we have to put a lot of thought into.
Absolutely. Thank you so much for your insight today, Tyler. And thank you for listening. Just a reminder, this video is for educational purposes only. This does not constitute any legal or tax advice. Please reach out to your advisor with any investment questions or when you're trying to make a decision with this. But we appreciate you listening, and we'll see you next time on Pursuing Knowledge.